Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about American Airlines Group Inc. quarterly report. American Airlines Group Inc. offers a wide range of services including scheduled air transportation for passengers, cargo transportation, services operations through hubs in major U.S. cities such as Charlotte, Chicago, Dallas/Fort Worth, Los Angeles, Miami, New York, Philadelphia, Phoenix, and Washington, D.C. Partner gateways in international locations like London, Doha, Madrid, Seattle/Tacoma, Sydney, and Tokyo. The stock price of American Airlines Group Inc. has dropped by 5.77% in the past year due to a series of disappointing financial outlooks, economic uncertainties, and operational concerns. Key factors contributing to this decline include disappointing CONE and full-year 2025 guidance, which led to a 9% drop in pre-market trade on the day of the announcement. Worsened CONE 2025 outlook, with a further widened adjusted loss forecast and lowered revenue outlook. Withdrawal of full-year 2025 guidance due to an uncertain economic environment and increased labor costs. Cuts to Q2 profit and revenue guidance, as well as the departure of Chief Commercial Officer Vasu Raja. Reinstated but lower full-year 2025 guidance, which led to a significant drop in stock price despite better-than-expected Q2 adjusted earnings and record revenue. These factors have contributed to persistent negative analyst sentiment, with downward revisions to earnings estimates and a sell rank for the company. Despite reporting a Q3 2025 net loss that beat analyst expectations, American Airlines shares had still fallen 31% year-to-date and nearly 7% over the last 12 months. The primary drivers of revenue growth or decline for the company can be summarized as follows. Revenue growth is primarily driven by increases in cargo revenue due to higher cargo yields, and other operating revenue driven by higher revenue from American's loyalty program. Specifically, a 5% increase in cargo revenue and a 9.4% increase in other operating revenue contributed to overall growth. On the other hand, revenue decline was mainly attributed to weakness in international travel, softness in domestic demand for air travel, and the impact of an accident on passenger revenue. The decline in passenger revenue outweighed the increases in cargo and other operating revenues, resulting in a modest 0.3% increase in total operating revenues. The loyalty program had a mixed impact, with some pages showing an increase in revenue and others showing a decrease, making it difficult to determine its overall effect on revenue growth or decline. The company's financial performance has shown significant improvement over the past year. Net income swung from a loss of -$149 million in Q3 2024 to a loss of -$114 million in Q3 2025. But more notably, it transitioned from a net loss of -$312 million at March 31, 2024, to a profit of $12 million YTD 2025. This improvement can be attributed to a decrease in non-operating expenses by 15.3% and a reduction in net periodic benefit costs due to an increase in expected return on assets for pension benefits. Profit margins also saw a notable increase from 0.66% in Q3 2024 to 1.11% in Q3 2025, primarily driven by the decrease in non-operating expenses. The improvement in financial performance is a positive sign for the company's future prospects and suggests that it is on track to achieve better results in the coming quarters. The company's debt level has experienced fluctuations over the past year. While total long-term debt increased from $28,365 to $30,118 in some periods, it decreased from $30.01 billion on December 31, 2024, to $28.21 billion on September 30, 2025. Long-term debt for AAG and American also decreased from the previous year. In contrast, interest expenses have consistently shown a significant decrease. Interest expense, net decreased by 12.5%, $193 million, in 2025 compared to 2024, with similar decreases observed across multiple periods, 10%, $48 million, 11.6%, and 10.8%. Regional performance review. The financial performance of various regions has been analyzed, revealing both successes and challenges. The Pacific region stood out as a top performer, with a 16% increase in passenger revenue in 2025 compared to the previous year. In contrast, the Atlantic region showed mixed results, with a slight decline in overall revenue, -0.1%, offset by a 1% increase in passenger revenue. Unfortunately, two regions struggled. Latin America, where both revenue and passenger revenue declined significantly, -6.3% and -3% respectively, and domestic, which saw a decrease in passenger revenue despite a modest gain in overall revenue, +0.8%. Management's outlook on company strategy. The company is committed to building an efficient airline while delivering a better experience for customers and team. To achieve this, management will actively manage cost structure, invest in digital solutions, process enhancements, and procurement transformation. Additionally, the company aims to strengthen its balance sheet through debt reduction and investments in equity investments. Key strategies include expanding the network through commercial relationships and strategic partnerships, investing in equity investments to support expansion, managing liquidity, and focusing on core operating performance. The company also plans to expand its fleet through strategic investments in new aircraft and engines. Overall, management is focused on creating a sustainable business model that balances efficiency with customer experience. The company's financial summary reveals that it has taken a conservative approach to shareholder returns. Specifically, the company has chosen not to pay dividends or buy back shares, indicating a focus on retaining earnings for future growth and investment opportunities. This decision suggests that management is prioritizing long-term sustainability over short-term gains. That concludes the financial summary for American Airlines Group Inc. Feel free to comment below, and I will be happy to answer them when possible.